Mark your calendar because on June 12th, SpaceX, the single biggest IPO in Wall Street history, is officially hitting the tape. But as a retail trader, you cannot buy this blindly on day one and hope for the best. You need a blueprint. Today, I'm breaking down my exact three-part game plan for trading the SpaceX IPO, how I'm getting shares early, my income strategy for launch day, and the signals I'm waiting for on my scanners. Plus, something no one else is talking about here, the devastating mistake retail traders are making right now with a copycat stock. So, set your thrusters to warp drive. Let's get going. Hey traders, Tom Gentile here, America's #1 pattern trader and founder of patternsandprofits.com, where we try to make sense of these uncertain markets by doing a couple of things here. Number one, spotting repeatable opportunities. And number two, creating alternative risk strategies other than simply buying the stock. Make sure to smash that like button and subscribe to the channel to get these videos as soon as they are readily available. Finally, I got to say this. Patterns are great, but past performance is not indicative of future results. So this is not investment advice. And with that, let's go ahead and get started. So on June 12th, that's a day you want to mark on your calendar. SpaceX is scheduled to go public under the ticker symbol SPCX. Now, it's targeting a $1.5 trillion valuation. Yes, trillion with a T. This is not just a rocket company anymore. It's a powerhouse combining Starlink, global space dominance, and of course, Elon Musk's XAI infrastructure. They're going to roadshow this thing in a few days before the IPO. It's going to bring in a lot of hype. And like I said before, you can't just buy and hope with this one. I'm going to tell you why. Remember Figma? It's down 75% since the IPO last year, closer to 85% if you bought on the market on day one. So let's not trade like meme traders did with Figma last year. Let's approach this like pattern traders using my three-step process. Step one, the IPO. Historically, retail investors were completely locked out of IPOs, typically forced to buy on the pop on the opening market day after big banks had already bid up the price. Not this time, because SpaceX is targeting a historic $75 billion raise. They've earmarked nearly a third of the entire float just for retail investors. So this just isn't for banks and big brokers anymore. Now, speaking of brokers, several major brokers are going to have access to this retail pool. So if you've got deep accounts at traditional brokers like Fidelity or Charles Schwab, then you can call them and you can request allocations, but they're often going to require you meet strict account minimums or maybe access thresholds to get to the front of the lines. Platforms like SoFi are also going to participate, but the allocations they have can still be heavily constrained based on demand. So fast forward to what I'm looking at and what brings me my personal vehicle for this play, and that's Robinhood. Now, Robinhood's IPO access is really become for the everyday retail trader. Everybody has access to this with a Robinhood account. They've made gaining the IPO access the easiest and probably the most frictionless process in the market. So first of all, there's no account minimums. There's no hidden VIP tiers. You don't have to be gold or anything of that nature. You simply navigate in the app or on the desktop to IPO access. You locate SPCX, and then you decide how much you want to allocate. The pricing will happen on June 11th. The stock begins trading on Friday, June 12th. Now, by utilizing this window, we are aiming to secure our shares at the actual offering price before the public begins and before the market order flow begins to hit the NASDAQ. That gives us a level playing field with the institutional giants right now, and we get to do so right out of the gate. So basically, it means we're getting in before the crowd does. And that's one important way of making money. But this is the investor. This is what we do as an investor. Step two, I want to create covered calls and turn immediately predictable cash flow on my stock. Now, options on newly listed stocks like SpaceX tend to lag the IPO for about a week, which puts the option launch right around Friday, June 19th. Now, because this is a massive highly anticipated IPO, guess what? Implied volatility, that's what represents the market's expectation of price swings, is going to be through the roof. High volatility means option premiums will be heavily inflated, and to capitalize on this, my strategy is to act as a covered call writer. That means I want to sell these options. Now, for those of you who are new to this strategy, a covered call is a conservative income play where you already own the underlying stock and you simultaneously sell a call option against it. So think of it as renting out a piece of real estate that you already own to collect regular monthly or quarterly rent. Now, here's exactly how you construct a covered call and how I'm going to do it with SpaceX. For every 100 shares of SpaceX stock that I secure in the IPO, I want to sell exactly one out of the money call option with an expiration date that's about a month or two from the IPO date. Now, depending on how long your broker makes you hold the stock, you might have to push that back, right? So depending on the restrictions they have, you might have to put that expiration date out just past the restrictions. But either way, you have a plan. And when you sell a covered call, when you sell that contract, you're instantly going to collect a cash payment. That's called a premium. And that goes directly into your brokerage account. Now, like any trading strategy, you've got to weigh the risks and rewards before you pull the trigger, right? That's with anything like buying call options or buying put options to something simple or more conservative like covered calls. So let's think about risks and rewards. First, as a reward, you get immediate cash flow, all right? That acts as a buffer. It lowers your net cost basis on the stock. And you also get to capture a specific amount of upside capital appreciation. And that's if the stock climbs from the IPO price up to the strike price of the call option that you sold. Okay? Options have both strike and expiration. You need to think about both. Now, there is risk with this particular strategy, and that is that the risk is that the upside's capped. If SpaceX pulls a moonshot and it jumps and skyrockets past the strike price, you're legally obligated to sell your shares at that fixed strike price, meaning that you're going to miss out any upside gains on anything above the strike price. On the downside, let's say the stock suffers a post-IPO crash, like Figma did. The premium you collect is going to offer you some cushion, but it will not completely protect you from a drop in the stock's value. Now, here's a question you might be thinking. What if I didn't get enough shares to warrant selling at least one call option? Because you need at least 100 shares to sell a call option and call it a covered call. If that's going to happen, then I'm going to look at cash secured puts as an alternative strategy to covered calls, and I'll be doing a separate video on this strategy and how it works just after the IPO comes out. So for me, the trade-off is clear. While the rest of the market is going to be chasing the momentum of both the IPO, the stock price, and the options when they come out, we're going to use that excitement to skim some high yield premium right off the top. It's going to immediately create income while building a defensive cushion to our core SpaceX position, right? That's what covered calls are for. Now, also, if you follow my work at Patterns of Profits, then you know I don't trade on guesswork. I trade on repeatable seasonal patterns. And that brings me to part 3. I like to call this part hurry up and wait. All right. So right now, SpaceX is a brand new animal. And I'm not going to guess how this stock is going to behave from day to day, or what's going to happen tomorrow, or 3 weeks from now, or even 3 months from now. I've got to wait at least a year because I need market data. And I need that data to print off just enough to at least know where the volatility is on a low and high basis. Now, as a seasonal trader, I need years of data. So once SPCX establishes its own trading rhythm, then I'm going to run it through our scanners to pinpoint exactly the windows where history will create predictable seasonal patterns. Finally, I'm seeing a massive, painful mistake that's happening in the retail market right now that nobody's talking about. Some traders are frantically buying up shares of copycat Virgin Galactic, ticker symbol SPCE, thinking they're getting a head start on the SpaceX IPO. Interesting, isn't it? This ticker is only one letter off of SpaceX IPO. Now, Virgin's jumped 47% in just the last week. I think that the pump and dump crowd is getting ready for the suckers to come in. And during that IPO, these suckers are going to buy Virgin instead. And I think that the ticker is going to closely fool enough traders to entice them to come into Virgin, or maybe even to entice some meme traders. And it's probably because of the absolute price of Virgin Galactic stocks. Now, let me be completely direct here. SPCE is not SPCX. Virgin Galactic is a separate company. It's highly speculative. They're in space tourism. In fact, they're not in space tourism because they haven't launched a tourism flight in nearly a year. That's not a company to me. That's an expensive hobby that shareholders are paying for. Take a step back. Look at SPCE in the last 5 years, down 99%. That should tell you all you need to know about this company. The real SpaceX IPO will trade under the ticker SPCX. Buying SPCE right now out of confusion is a recipe for disaster. Don't make the mistake in the frenzy. Make sure your capital is positioned precisely where you intend it to be. In fact, I believe SPCE is going to become a selling opportunity, maybe even ahead of the SpaceX IPO, as people find out that either they're in the wrong stock or they start seeing the traders who bought early heading for the exits. The SpaceX IPO is going to rewrite financial history books on June 12th. My 3-step plan is designed to take advantage of the stock as an early investor, take advantage of the options IPO as an income seller, and eventually create multi-day opportunities as a pattern trader. Remember this, I'm not a day trader. I'm not a meme trader. I am a rules-based pattern trader. Now, where do you see SpaceX going after IPO day? I would love to hear your comments. Finally, if you want more insights into what we do here at patternsandprofits.com, then come check us out.